As we enter January 2026, Nvidia remains the most compelling growth story in the global market, presenting a rare generational buy opportunity. The current price action reflects a stock that is consolidating its massive gains from 2025. Yet the underlying fundamentals suggest that a breakout is imminent. I don't want you guys to miss this opportunity. The primary catalyst is a staggering supply and demand imbalance. A demand for Nvidia's AI infrastructure continues to outpace production capacity significantly. Chips with the next generation Rubin architecture slated for a 2026 launch, analysts predict that this supply crunch will maintain extreme pricing power, likely driving the share price towards new all-time highs as the scarcity premium takes hold. Financially, Nvidia is not just beating expectations, it is redefining the scale of corporate profitability. In its most recent Q3 fiscal 2026 report, the company posted record revenue of $57 billion, which is a 62% increase year over year, with non-GAAP earnings per share EPS hitting $1.30. Even more impressive is the forward guidance for Q4, where management projects revenue to climb to $65 billion, representing a 65% jump from the previous year. This trajectory is fueled by a near-term total monopoly in the AI accelerator market, where Nvidia maintains an estimated 85 to 90% share. The consensus on Wall Street is overwhelmingly bullish, with Nvidia maintaining a strong buy rating from the vast majority of analysts covering the stock. Major institutions like Morgan Stanley, Bank of America, and Truist have recently issued upgrades or maintained overweight ratings, citing the company's ability to sustain gross margins in the mid 70% range. While the median price target currently sits around $250 to $256, several high-end estimates from top-tier firms like Tigress Financial have set targets as high as $350 plus. These analysts point to the Rubin roadmap and the expansion of the Nvidia AI enterprise software suite as secondary moats that will force upward revisions to earnings models throughout the year. Tigress Financial Partners recently upgraded Nvidia to a $350 price target, citing that Nvidia is the premier AI investment with pure dominance in the full-stack data center leadership. FineSeth points to the accelerating adoption of the Blackwell platform and the underappreciated multi-billion-dollar opportunity in the healthcare biodigital vertical as key drivers for the next leg up. Bank of America Securities has reiterated a buy with a price target raised to $275, and they highlight that the demand visibility now extends through the calendar year of 2027. The key catalyst here with Nvidia and their Q4 earnings call, which is expected very soon in February 2026, is expected to confirm the Rubin roadmap, which analysts believe will be the trigger for the next wave of price target revisions toward the 300 plus level, meaning you don't want to get in after this fact. You want to try to get in prior to February. That's really what this is all about. Nvidia's market supremacy is currently enforced by the Blackwell architecture, a silicon beast that has monopolized the data center with a backlog stretching deep into 2027, effectively rendering competitors irrelevant in the high-performance tier. This financial fortress is being unexpectedly fortified by the Chinese market, where a new regulatory framework has unleashed a surge of H200 orders to hyperscalers like ByteDance, effectively reopening a multi-billion-dollar revenue pipe that Wall Street had previously written off. Yet the true checkmate lies in the upcoming Rubin R100 platform. Launching in late 2026 with unprecedented memory bandwidth, it is the linchpin in the roadmap that provides management visibility into a staggering $500 billion in combined revenue, ensuring that Nvidia remains the undisputed, exorbitant toll booth for the entire AI economy. You look at Nvidia, there's always going to be consolidating periods on stocks that have such amazing growth, especially ones like Nvidia. You can see there's a big bump in growth here in January of 24, cools off, runs again. There's a cool off phase, and then it runs again. Now we're in this cool off phase. And when you look at these, not every piece of history is going to repeat itself 100%, but when you look at this consolidation phase of June of 24 to May of 25, there's about 10 to 11 months of consolidation. We started this consolidation trend in July, so we're only about 5 or 6 months into this. Not quite 6 months. We still got a couple more weeks to go. By earnings will be well over 6 months. So as you can see, as we get into March and April, you would think that based off of the current growth, it would do something similar and we would get something like this. If you look at the landscape of the stock, just based off price action. We come up, consolidate, come up, consolidate, come up, consolidate. A dip here, which was part of the crash last year. So if we don't count that, then the consolidation would have stayed here. So we would have had consolidation from October to June, which is about 8 months, 7.5 to 8 months, which we're about 5 months right now. So we might see a little bit of a dip back down to 175 and then she runs, or it just consolidates and then runs. But either way, when you look at the way this stock moves based off of its moat, based off of its growth, based off EPS, earnings, revenue, the monopoly that they hold over the market, and the way Nvidia just sits there with the supply and demand issues, with massive price control and the ability to sell out months, if not years in advance, is very powerful opportunity when growing future guidance and a future PE or price to sales. When we look at the financials of Nvidia, their total revenue is almost 200 billion trailing 12-month, net income 100 billion, basically just about 99 billion, and their EBITDA is over 100 billion, 112 billion trailing 12 months. And when we look at their quarter growth, in 2022 they had 6 billion. In 2023 it was 18 on average. In 2024 it's 40, and now they're pushing 60. This is incredible revenue growth, and this is what matters, revenue. But what matters even more is net income, and it's also growing from 1 billion to 2 billion to 12 to 16 to 22, 26 to 31, and it will not surprise me to see these numbers, these net income numbers, in the 40 and 50 or higher, as in billions, in the coming few quarters. When we go look at their balance sheet, they're sitting on $50 billion in cash, 49.7, 49.8 billion essentially in cash. And they have enough equity. Total assets cover liabilities easy, an equity of 120 billion, 119 billion to be exact. And when we look at their cash flow, 83 billion trailing 12 months, 77 billion in the free cash flow, one of the most important metrics. Every year they have a free cash flow, or the trailing 12 months, they have a 77.32 billion in cash flow. When you look at their cash flow, their balance sheet, their equity, their net debt, cash on hand, the way they're bringing in money, the growth, look at the growth here from Q1 24 to Q3 2025. Look at the growth. It's staggering growth. When we look at the performance on the chart, you can see the growth that Nvidia has had from 2025 and 2024. And it's highlighting a 2026 run with the buyback. And after this consolidation and this market the way it was, and the way things are starting to line up, inflation down, jobs added are up, things are stabilizing. This is a very big opportunity to get into